Time now for some business news. I'm joined on set by Stephen Carroll. Good morning to you, Stephen.
Hello, Thomas.
It's been a rough few days on the markets. The amount of money that's been lost since that Brexit vote on Thursday keeps climbing.
That's right. The $3 trillion now is the total of what has been wiped off global shares in the 2 days of trading following the vote. Market watchers say Friday's losses were mostly down to the fact that investors had bet on a vote to remain in the EU, while the falls continued on Monday as they assessed the longer-term fallout from the decision. While European markets have seen some of the biggest plunges, almost $1 trillion was wiped off the value of the S&P 500 index on Wall Street.
That news coming as two ratings agencies downgraded the UK on Monday.
Standard & Poor's became the last of the three main agencies to strip the UK of its AAA status. S&P said the referendum results was a seminal moment that would herald a long and painful period of uncertainty. It cut its rating by 2 notches to AA, while Fitch downgraded Britain by 1 notch to the same level. The move has yet to impact on the UK's borrowing costs, which have actually fallen since Friday, as investors still consider government bonds a safe investment.
Well, we tend to think that this is a result that's affected just the UK and Europe, but actually the effects are as far-reaching as South Korea.
The government there has cut its growth forecast for Asia's 4th largest economy and is planning an extra budget because of the uncertainty created by the vote result. It's to include a $17 billion stimulus package to help boost growth. A statement from the presidency said the move is in response to potential contraction in growth and employment due to Brexit.
OK, Stephen, how are the markets trading this hour?
Well, the Kospi in Seoul actually saw some gains after the announcement of that stimulus package by the South Korean government. Elsewhere in Asia, we've seen small gains on the Nikkei in Tokyo and on the Shanghai Composite. Just Hong Kong trading down in Asia. That's after markets reacting to comments from China's Premier Li that Beijing wouldn't allow drastic changes in capital markets after the Brexit vote. Here in Europe, shares finally starting to see some recovery as well after big drops in recent days. London's FTSE 100 up 1.6% at the open. Paris's CAC 40 up over 2%. Mining shares and banks seeing the biggest bounce after being pummeled in recent days. RBS is up 2.5% in London. That's after falling almost 30% in the past 2 days. Its shares going back to a level not seen since the financial crisis. So we're seeing gains on European shares today. On the currency markets, also finally a little bit of recovery in the value of the pound. We're seeing it up about 0.5% against the dollar. £1 worth just under $1.33. That's after the pound hit a fresh 31-year low of 131 in trading on Tuesday. We're also seeing some gains against the euro as well. Market analysts, though, telling us that we should expect further falls in sterling in the weeks and months to come.
Well, in other business news, Volkswagen is said to have reached a deal in the US over the emissions scandal.
The settlement is to cost the car maker almost $15 billion. It'll be the largest in the automobile sector in US history. Now, that includes $10 billion to repair or buy back Volkswagen cars that were fitted with the emissions cheating devices. Details of the deal will be filed in court later, but it won't be the end of Volkswagen's legal problems, as Shirley Sitbin now reports.
Volkswagen sold almost 500,000 dirty diesel vehicles in America from 2009 to last year. It's now preparing to fix them all. Under a deal reportedly struck between the German car maker, American owners and regulators, Volkswagen offers to buy back cars or repair them so they would comply with clean air norms. Their engines emit 40 times the legal amount of nitrogen dioxide, but the company hid this from consumers and regulators by installing software that cheats emission tests. The reported $15 billion deal includes buybacks, compensation to owners, investment in green technology research. It's the largest settlement ever in the car business, but it's just the first in several deals Volkswagen will have to make.
I think, again, this is just the tip of the iceberg in terms of what they can expect from other follow-on lawsuits from certain states such as California that are going to go forward for even more action. And the impacts are going to continue on further with impacts to future product development and what Volkswagen can achieve with kind of a diminished budget going forward.
Similar lawsuits are expected across the world. 11 million vehicles are involved. Since the scandal was revealed last September, Volkswagen brand sales have dropped by 13% in the US. Its diesel car's average value is down 19%.
And finally, just one more word on the Brexit, Stephen, and that's the effect that it's having on billionaires.
I'm sure you'll be very upset to hear that, according to Bloomberg, the world's richest have lost almost $200 billion since Friday because of the market turmoil. So the 400 richest people in the world, according to their list, control $3.2 trillion in all. European billionaires lost the most of over 80 billion, but figures like Bill Gates and Mark Zuckerberg have been hit too. They've both down about $1 billion each. I'm sure your heart bleeds.
Absolutely no sympathy. Thank you very much, Stephen, for that look at the business news.